Greetings, my YouTube family. I am happy to share with you another exchange traded fund that I thought it would be interesting, and that is SCHX, and that's the ticker name. But before we get started, I'm going to disclaimer that this is content for educational purposes. As such, it should not be taken as investment advice. Now, to get started, I will, talk about this particular exchange traded fund, its history and portfolio, historical performance, and share with you what I think about this particular exchange traded fund. Basically, an exchange traded fund is investors put their funds together and then they invest through a fund manager who then buys, specific securities, be it stocks, bonds, and they have a specific benchmark that they seek to achieve, and also they charge fees for that. Now, for those who don't know me, my name is Isaac Jonas, and I like creating content like this. And I'm also a retail investor in the US and Canadian stock exchanges. And I like, sharing content like this. Now, getting down to the business of the day, this particular fund is managed by Schwab Asset Management, which is one of the top funds, that manage, funds in the world. And they're based in the US, and it was started in 11 March 2009, and they've net assets of 37 billion as of 21st of February 2024. And the goal is to track the Dow Jones US Large Cap Total Stock Market Index, which is, the Dow Jones is one of the top and historically significant index funds. Basically, an index fund is a benchmark that is, used, and basically in terms of definition, they just, uh, decide to say, okay, based on the market capitalization or the characteristics that the bureaucrats decide, they then say, okay, this stock is going to be, in the Dow Jones. For example, Amazon recently was added in the Dow Jones, right? And then they can remove other companies that don't do well. So it's a very interesting, index in the US. But in terms of the highlights of this particular fund, what I like about it, currently they have 752 companies that they are invested in as of 22 February, and it can change. And this was in 2024. But they aim to have 750 of the largest US companies invested in this fund. So it's good. It is a diversified portfolio, and it has very good liquidity, like 2.5 million today when I checked. But today the market was unusually, trading very, there was a lot of liquidity because the stock market was up. And when I look at this particular fund, um, over the past 1 year, the lowest it had was, about, $44.95, and the highest so far it hit was $60.22, so 23 cents. And so it is particularly, growing. You can see that, it has, moved from, about 45 cents to now 60 cents. So that's growth, and capital appreciation. Now, in terms of the top holdings, you can see that they own Microsoft about 7%, Apple, which is similar to some exchange traded funds that I have reviewed, like SPY, that tracks the S&P 500. But you can also see that, just like, SPY, XUS, VOO, which have a bigger weighting in technology, information technology, they also have that. But they also have, a fairly high weighting on the healthcare. Healthcare is a very interesting sector because, people need, to see, doctors, and healthcare is something that, we can't do without. So it's an essential need. So they also have a big portion of their money relative to other sectors, in consumer discretionary, about 11%, and financials as well. So this is good, and most of the money, 99.96, is invested, in the stocks for this fund, and about 0.04% is the one that is in cash. Now, when I look at the historical performance, I can see that this has been beating the S&P 500, but the benchmark, as I said, is the Dow Jones. You can see that over the past 10 years, the Dow Jones returned 12, grew by 12.42%, but it was slightly 12.39%. But, there are fees and other administration fees, but it's very close. When I invest for the long term, I look at 5-year, 10-year returns. And of course, the past does not guarantee the future return, but it kind of gives me an indication of how a fund has been doing, right? I would not invest in a fund that is lousy and not doing well. You can see that if you had invested 10,000 about 10 years ago, it would be about 30,740 in this fund. But also, if you had invested in different funds like the Dow Jones, you see that it would be slightly more, like I showed you, right? You can see that this is the fund here. It has been on an upward trend, but there has been some days like when COVID hit in 2020. There were bad days, but for me, that's when I add more shares, especially if I believe in that particular fund, because that would be a discount, an opportunity to add more shares. So now, in terms of buying these shares, I use Questrade as a broker. I'm not promoting them per se, but the thing is, I just search the ticker name for the fund. It's an exchange traded fund. It pops up, and today it was trading at this range, and I click buy, and then it gives me this option. Let's say I want 100 shares. I click buy or sell, and then if I have the funds, I can do so. I was just using my margin account here just for educational purposes, and you can see the commission fees, they are very negligible, almost zero, right? It's 0.03%. Now, in terms of the merits of investing in this fund, it is very interesting, right? It has diversification, exposure to 752 companies as of 22 February 2024. So it's well diversified. It's not in just one fund. So that's what I like about these funds. And then it's convenient because one share will have a fraction of shares in Apple, Microsoft. So you own a piece of that, right? In under one share, and the fees are very low compared to buying an individual share, which using my broker I can pay as much as $4.95. That one, the fees are very negligible, and I buy and hold for the long term. And now, if I look at the tax efficiency, because it's passive investing, it's not really expensive, because you just buy and hold. When you sell securities, it triggers tax liabilities depending on the account that you are invested in. In Canada, if it's in the margin account or other non-registered account or RRSP, you pay some tax in terms of the registered retirement account. They actually withhold the money, right? So in this case, if it's in the tax-free savings account, I put in, let's say, 25,000, it turns into a million, it's tax-free, it's my money, right? Now the risks, it doesn't go up in a straight line. I mentioned that in when COVID hit in 2020, it dropped. So, if you sold at that time, you could have potentially lost the, money, right? So it is very important as a retail investor. In my case, I look at the long term. Okay, so when I do that, it means that if it drops, I'm just gonna keep on adding shares. If it goes up, maybe I may hold on for a little bit, but just I buy on a red day. So that's what I do, right, to optimize my returns. And then credit risk, let's say out of the 752, Apple declares bankruptcy. Hypothetically, what it means is, it might potentially affect the company, so there might be credit risk. But it's better than investing in one fund. Let's say you're invested 100% in one stock and declares bankruptcy. It means your money can potentially go to zero depending on the share class that you will be holding. And then liquidity risk, it is highly liquid. I like that. And when I compare with the S&P 500 and other funds, this is one of the top funds that I have reviewed. So I thought I would just share this information with you, my dear viewers. And if you haven't subscribed, please consider subscribing so that you can also, share your comments and thoughts, and also so that more people can, have access to this video. Thank you so much, and may the markets be with you, and have a wonderful day. Thank you, and bye.